In this episode, we speak with Petri Oksanen, a partner with Francisco Partners and co-head of the firm's European investing efforts focused on enterprise application software companies, with a particular interest in industrial, manufacturing, and other vertical sectors. Based in London, he joined the firm in 2005. Petri previously held positions at Morgan Stanley and Microsoft. Francisco Partners is a leading global investment firm that specializes in partnering with technology and technology-enabled businesses. With approximately $45 billion in capital raised, the firm invests in opportunities where its deep sectoral knowledge and operational expertise can help companies realize their full potential. Francisco Partners was recognized by GrowthCap as among the top private equity firms of 2024. I'm your host, RJ Lumba. We hope you enjoy the show. If you like the episode, click to follow.
RJ Lumba is the managing partner of GrowthCap and the executive chairman of Market Insight Media. He is the host of Growth Investor, a podcast featuring today's best investors, executives, and founders. In the minutes ahead, we'll uncover insights and strategies for accelerating growth and succeeding in business.
Petri, thank you so much for taking the time to chat with us today. It's a delight to be with you.
Thanks, RJ. Really appreciate the opportunity.
One of the things about software investing is that there's kind of this bifurcation, right? There's like the old guard, well-known firms, and then maybe there's just like a newer generation. Francisco has always had this very prestigious reputation in the industry. And then I was looking back, I was like, it seemed like you'd been around longer than the founding date, which I believe is 1999, but it always felt like Francisco has been like an institution in Silicon Valley and tech investing. Tell us a little bit about when you came into the firm and what you focus on, and maybe a little bit about your history kind of growing up with the firm.
Happy to, and you're very kind for the comments. Thank you. So I joined the firm in 2005, towards the end of Fund 1. So now been with us for about a little over 19 years. Did my first 13 years at the firm in the Bay Area, and I've now spent the last 6.5 years in our London office. I split my time today on two fronts. One is focusing on enterprise application software companies, typically vertically focused in Europe. And then also on the other side, focus on industrial software companies on a fairly global basis.
Software investing, is very challenging for a variety of reasons. You've managed to do this role very successfully. Can you tell us about maybe your approach to investing? And do you look for certain characteristics of a business? Is there a lot of similarity from each situation you see, or are they all completely different?
It's a great question. Look, I think they're all pretty different. And I think it starts for us as we seek to be part of transformational capital for technology companies. And what that means to me personally is we spend a lot of time understanding markets and market structure and trying to pick a market with the right structure that has the characteristics that can enable hopefully building a great software business within that. And ideally, hopefully seek to transform not just the companies that we invest in, but then the entire industry if possible. And by its nature, that tends to be oftentimes perhaps smaller markets than some may have, but with business, for example, with very high relative market share. And then it's also applying a lot of kind of pattern match. And that's a bit of a dangerous word. And some people throw it around as like, you don't want to hear that. But, people often say, history doesn't repeat itself, but it rhymes. And I think that's very true. And so when you can bring the experience, obviously our firm's been around for 25 years, and I've personally been firm for 19 years, you just start to see a lot of different ways of doing things. And hopefully that helps us avoid recreating the wheel. What I always say with the companies we partner with, we love to help them do in 4 to 5 years what might ordinarily take them 10 to 15. And that's a big part of, I think, of our approach and being that part of transformational capital. And so happy to go into deeper in that as well. But I'd say that's at the 50,000 foot view what we're focused on.
Yeah, no, that's a great area to spend some time in. I mean, creating value is frequently what founders, executive teams want to see from their capital partner. Are there some key ways that you look to help companies that you're so heavily invested in?
There's a lot of different ways, but I'd say look, we don't come in with a playbook. Okay, we're very situational, and what makes sense for one company doesn't make sense for another company. Some companies we invest in grow 4% a year organically, some grow 40% a year. You can imagine that the difference between the two and how they operate is quite meaningful. But again, it's really trying to going back to that broader point of like, what is it that we can do differently? Sometimes it's really leaning in on organic growth. And that could be anything from going from a direct sales model to building out an indirect model. That could be geographic expansion. Sometimes that's M&A, and that's really expanding the product set, not just doing M&A for the sake of M&A and try to do like a hyper roll up, but really being strategic to expand and ideally really build on a platform. And I think some of the most interesting companies I've been fortunate enough to partner with are situations where we've been able to find a company like a system of record software company that's built a great position in a sector, but maybe for a variety of reasons, could be the risk appetite of the prior owners, could be the experience base of the prior owners, or both, hasn't been able to necessarily think as big as they could have, right? One of the things that we were really trying to do is, and this is why I think the private equity model works pretty well, is, first of all, we de-risk the ownership, right? So, if we're coming in, oftentimes the majority of our deals are controlled buyouts, right? And so that also, especially for a founder, that can be meaningful. There's oftentimes like their entire net worth is tied up in the company. To being able to take some chips off the table, but then potentially roll and maintain meaningful upside, is important. But that also allows them to feel more comfortable leaning in on a more forward-looking basis. And oftentimes what we do when we partner with the companies that we invest in, it's actually coming in with an even more expansive view of the art of the possible. And sometimes that's strategically. So, it could be like, hey, you build this great system of record in this little niche, but there's adjacent areas we can go into, maybe help enable an end-to-end workflow, right? And really build out a true platform play. That gets pretty exciting. Sometimes it's looking at a business which is owned by a public company and like doing divisional carve-outs. We've done over 45 of them. It's one of our core areas of strength, and saying, hey, we think that we can drive this a fundamentally different level of operational performance. And sometimes it's actually both. And I think when you can bring in that bigger, more expansive perspective and then execute on that organically, and we have a strong operating team called Francisco Partners Consulting that enables this to avoid recreating the wheel to move faster, and then supplement that with M&A, that's when you get some really exciting outcomes and developments.
Now, how does artificial intelligence play into your investing and into the scope of investment opportunities you look at? Do you see it as within the software industry and within the software companies, or do you see it as like a whole separate vertical, like here's pure native artificial intelligence companies that we're going to start investing in?
Look, it's a very topical question. And I didn't mention this in the beginning, but my background is actually on the technology side. So, I was a total computer geek as a kid growing up, and my first job was working at a computer store when I was 13. So very much, in the tech side. And I did my undergrad in computer engineering and was with software companies along the way. Before I went to the dark side, did banking and then private equity. So it's interesting to hear about topics like artificial intelligence, because we were talking about like recursive algorithms and like some of the early forebears to these approaches in the late 90s. And obviously there's a lot of focus on it now, and that's appropriate. But a lot of these concepts have been around for a long time, and it's certainly something that's very topical. We're very focused on AI. I'm personally a little skeptical about the level of hype it's receiving, in particular, in the venture community. It's clearly going to be a very powerful technology. I suspect, as with most things, there's this old saying that most people underestimate the long-term impact of trends and overestimate the near-term impact of them. And I think that will probably be true, with AI. But from a disruptive perspective, especially when I tie that back to where I spend all my time on the enterprise application software side, I don't worry as much about the companies that we're partnering with them being disrupted. Because, if you look at one of the core elements of AI, one of the things I think a lot of people are beginning now realize in particular is, yes, the technologies are incredible and they're very powerful, but they really are powered by data. And you need to have access to the data in order to be able to drive the right outcomes, the right decisions. And, if you look at, what are system of record companies, they are the ones with the data in the vertical that they're in, right? And one of the things in particular that's very important is having structured data. And again, that exists within the system of record companies. So I believe that it's absolutely going to be impactful, But I think it's going to be more a case of the application software companies, especially the system of record companies, being thoughtful in adopting that technology on top of their existing solution sets to derive insights that aren't maybe possible with more traditional technologies. And then also obviously leveraging the productivity benefits, whether that's Copilot on the development side or some of the LLMs for marketing collateral or chatbots on the customer support side. I mean, there's absolutely ways to drive productivity, but I think those are going to become more like table stakes, just like other technologies have come in. But on the actual, the risk of disruption of a system of record business, I don't share as much concern on that. I mean, at the end of the day, no matter what AI is doing, you still need to have a GL, right, for your business.
We'd love to talk a little bit about investing in Europe and maybe some of the differences in just the overall company landscape within software in Europe versus the US. How would you kind of describe it?
So there's a number of differences. One, on the private equity side, I think the European market it's catching up, but it's historically been less mature. There's been less tech specialists. It's been more generalist firms, oftentimes regionally focused, who have been playing in the PE space. That has begun to change, and there's been more tech specialists, coming over. We started our London office in 2004, for example, and there's a number of other players who have begun to develop that. But there's not as much tech private equity expertise, I think, in Europe as there is in the US overall. I think the second point is the founder mindset in Europe. This may be a provocative statement, but I don't think it's historically been as forward leaning or as ambitious as we see with a lot of the US founders. And some of this may be cultural, some of this is also just, we talk about Europe as an entity, but obviously it's actually a collection of many different countries with different languages, different regulatory environments, different legal systems, et cetera, that have to all be catered for. And so that also creates a different dynamic because, if you're a supply chain software company in Florida, you can sell equally as well to a customer in Seattle as one in San Diego or one in Boston, but it becomes much harder to do that. And supply chain is maybe not the best example because it's a little bit more horizontal. But in other areas, whether if you're focused on the Nordics, you're maybe less likely to be prevalent in Italy, for example, or in France. So there is this interesting mix of the market structure, the entrepreneurial appetite, but I think that all creates opportunities. We have seen some very large local champions get built in a number of countries. We've been participating in some of our investments in helping drive consolidations regionally. And then I think there's also, again, bringing that private equity mindset and helping de-risk for founders their own financial wealth, that opportunity to be more ambitious. And to be clear, there are obviously very ambitious execs in Europe as well, but sometimes they've not always been partnered with the right folks. And I think that creates an exciting opportunity for us and for our competitors.
Mm-hmm. And when you're working with companies and say it's maybe the early stages of building a relationship with the CEO or founder, what are the types of qualities that you kind of highlight that Francisco Partners brings to bear, and the benefits of maybe working with a firm such as yourselves versus another firm?
Well, look, first of all, there's a lot of great firms out there, and I think everyone brings a different angle to it. The things I would touch on is, one, we very much take a partnership approach, with our management teams, and I always encourage potential companies we're talking to feel free to reference check any of our investments with our management teams and start there. I think the depth of experience which you touched on, being one of the first tech-only private equity firms to come into existence, that gives us an experience base that's just broader and deeper than some others. We have an operating team called Francisco Partners Consulting. Horrible name because there's no consultants; they're all operators. Many of them actually come from FP portfolio companies, which I also think is also a differentiated capability set because we're able to help not just with high-level strategy and potentially interim roles at the most senior levels, but we offer deep functional expertise in specific areas like go-to-market ops, which used to be called sales ops or fin ops or cybersecurity or cloud ops. So we go, both at the more traditional ELT level, but with a very granular level of operating support and capability. And all of this comes together with the view of going back to my earlier comment, how do we help companies achieve in 4 to 5 years what might take them 10 to 15? And a key part of that on the operational side is not coming in with a playbook and saying, hey, this is how you need to run your company. But it's like, hey, if there's an operational challenge that the company is facing, if we have the capability in now say, hey, look, we've been through this with a number of other businesses, and here are execs who've been in the chair who can support you in whatever capacity, whether that's coaching, mentoring, potentially interim support, or some other capability to get over that as quickly as possible. It just benefits everyone because you can move faster, right?
Mhm.
And that's really a core piece of it. And then I think finally on the investing side, we've, as a partnership, focus on specific verticals. I mentioned the ones I touch on. I have other partners who focus on areas like healthcare IT or infrastructure software or ed tech or fintech. And we all try to go very deep in our verticals and our end markets. And hopefully that creates both, whether it's relationships, networks, market knowledge, ability to effectuate M&A, relationships with strategics, whether that's for exits or partnership discussions, et cetera, that may not come from someone that doesn't have that same level of depth of exposure and experience in a specific area.
Is there a favorite portfolio company that you've really helped develop? Maybe it was kind of a unique thing, either strategically or operationally, that you were able to add to the company that made it ultimately very successful. One that you can say, like, oh, we really did a great job on that one.
Well, look, we're not generally in the business of shouting from the rooftops of how great we are. I've been fortunate to be involved with a few fairly transformative situations. And, like maybe to pick one, there's a company that we partnered with. It was a great business. It's actually a pretty interesting case. This company was growing organically 20% a year, doing over 50% EBITDA margins. So great financial profile. And you might say, hey, what could private equity, possibly do with this business? And they built a great platform in a specific niche. And it's actually a founder-owned business, founder-controlled. And we partnered with the founder, bought control, and really with a vision of helping them develop an end-to-end platform, in this space. And so, again, they had a great business doing what they were doing. We said, look, if we could go into some of these adjacent areas that are pain points that this founder's customers were facing, every day, we thought there could be a lot of value that could be created because one of the challenges in many enterprises, and we've seen this actually with a number of different investments, is there's a lot of siloed systems, right? But because they're siloed, you're not able to build end-to-end workflows, and you can't leverage data from one silo to drive insights and decisions in another, and vice versa. So we partnered with this business to do, actually, we ultimately did 4 acquisitions quite quickly, and we basically increased revenues almost 2.5x, through that basis. Profitability stayed the same, and really started to build an end-to-end platform. And it was an interesting one where, because the first couple of deals we did, the founder had never done any acquisitions before. And the first time we did one, we were having a board meeting and we're talking about the results for the quarter. And he said, yeah, his business had done great, but the acquired business had missed the plan. And as if they were 2 separate businesses. And I shared with them, I'm like, well, we do now own the company. So like, this is not them and us. Like we're one company, and we need to approach it that way and manage it that way. And he was actually a little bit frustrated because he's like, well, but my business is doing great and my team is doing, but it's these other folks, right? And we worked through that and we helped with the integration and then some thinking. And then as he started to see how the flywheel started building and impact that these acquisitions had, not just in terms of financial metrics on the scale, but the presence that we began to inhabit with his customers, which are some of the largest companies in the world, they really started to view us as a strategic partner. And then they started to come to us to solve more problems. And so we ultimately exited that business as a strong return. And then he actually continued on and went on and did another, I think, 10 acquisitions after that, continued to run the business and continued to scale it. And it's now like 3x what it was when we invested, roughly, on a revenue scale perspective. And it's become a really transformative player in its space. But what was really satisfying to me was, he had a great business to start with, and he was very happy with it. But because of that de-risking, we're able to kind of think bigger. And then not only did that change the game for that business and the scale, and obviously the employees that came with that and the opportunity that came from that, but it also had a real impact on the end customers, because now we were like leveraging data and insights from one module into another, and it all kind of started to self-reinforce. And then we could start to solve problems nobody else could solve in the industry. And that transforming a company and then hopefully transforming the industry it serves is ultimately gratifying. And I always say, look, if you build a great company, the returns will take care of themselves. And so we focus on building great companies. That's one example where I think it was that culmination of factors coming in. And we actually also had strong FTC support on the operational level to make that happen.
Excellent. We're entering the tail end of the conversation. I have two final questions. One is, can you tell us about a person who has had a profound influence on you?
Yeah, absolutely. One of my partners, actually two of my partners I would pick for very different reasons. They have very different personality styles, but have had really deep impact, not only in terms of how, I've kind of modeled my career on elements of what each of them has done and learned from them, but also the way they live their lives and the way they operate. And one of our founding partners is Sandy Robertson,
Hmm.
who's a true legend. And just to share an anecdote, I'll never forget, one of the earliest experiences I have of seeing Sandy. I was an associate. We had a CEO coming in to present to our investment committee, as we often do. And this was a relatively small company. Sandy is like on the board of Salesforce and on the board of this company and started Robertson Stevens and Montgomery Securities. And this total, legend. And I'll never forget, I watched as Sandy was in the room, the CEO walks in and Sandy just gets up and walks up to him and says, "Hi, I'm Sandy. Really nice to meet you and really looking forward to learning about your business." Just no ego, no long backstory of all that he's accomplished in his illustrious career. Just a genuine personal connection and a genuine desire to learn about this business and from this person. And both of my mentors at the firm cite Sandy's influence. And actually, as I think about it, I cite Sandy's influence very much because he's someone who's extremely successful, but the way he did it was really incredible and just very inspirational, is the way I'd put it.
Okay, last question. Can you tell us about a charity, cause, or other endeavor that you're passionate about?
I'm very passionate about supporting my alma mater, the University of Waterloo. And in particular, they have a very strong and large engineering school, big focus of theirs, and what I focus on my undergrad. But working with them and supporting them on thinking about how can their students have the maximum impact globally, not just in engineering, but in all aspects. And I think there's a lot of very talented people coming out of high school who often don't know what they want to do with their lives, who choose to pursue engineering as a very interesting area to go into. It's an intellectually challenging and an intense area. But oftentimes there's actually a lot more those folks can go on to do beyond engineering. Obviously, engineering is a wonderful place to build a career, but you can also build some pretty interesting careers beyond that. And so I've had the fortune of serving on the Dean's Advisory Council for the Faculty of Engineering for a number of years and helping share that industry perspective with them as they support their students. And then as part of that, really helping think about, how can we drive greater diversity in particular into the pipeline. We always talk about you really need to start at the beginning of the funnel, right, to drive diversity. And that's been a big focus with how do we drive more diversity in the engineering faculty at the University of Waterloo. And I believe if we can get that going, and the team there has done a fantastic job beginning to drive that, then that will then drive all the knock-on effects, whether that's in banking, private equity, tech more broadly. And I think we can all agree that increasing diversity is something that's of a keen focus for everyone.
That's excellent. Well, Petri, I want to thank you again for taking the time to chat with us today. This has been a wonderful conversation.
Thank you, RJ. Appreciate the opportunity.